Welcome back. Time now for our daily question and answer feature. Our question this evening comes from Tibelo, who wants to know what we mean by potential growth when referring to the economy. ENCA resident economist Trudy Makaya answered this question.
Every quarter, Stats SA tells us how fast the economy has grown. We also know the size of the South African economy. But how do we know if we're growing at the rate that we could potentially grow? This is what economists try to do when they estimate the potential growth of an economy and the output gap. In essence, the output gap represents the difference between the actual growth rate of an economy and what it could or should be growing at given the labor and the resources and the capital within that system. Today, officials from the Reserve Bank released an estimate through a working paper which shows that the South African economy's potential income at the moment is actually 2.5%. Of course, we need growth that is much higher than that, which would mean expanding the inputs and the productivity of the workers and the inputs that we do have. But given what we have in this current circumstance, 2.5% actually seems to be the best that we can do.
Let's look at the markets now, and we start in the United States. Markets there were mixed and they fluctuated really near the all-time highs that they've been hitting in recent times. An unexpected drop in consumer confidence offset strong third quarter GDP growth in the US. That came in at 3.9% on an annualized basis, a number we would have loved to see here in South Africa today. In Europe, markets were at 2-month highs. Investors continue to bet on more central bank support, but analysts are saying that there are real risks of recession and deflation, but that there are also reasons to believe that 2015 will be a better year for the Eurozone than 2014. Here at home, the JSE closed in the red, led down by mining stocks for the second day running. Market sentiment was subdued despite an announcement of a significant deal between global furniture retailer Steinhoff and Brait on the takeover of Pepco. Looking at the commodity markets, prices remaining muted with oil prices flat ahead of the key OPEC meeting in Vienna. Oil prices have fallen almost 30% since mid-year, and pressure is now on OPEC to show what leverage it still has on the oil market. On the currency market, the rand came off its weakest levels against the dollar today after the release of that GDP data. And that's it for today's edition of ENCA Moneyline. Do remember, you can send us your comments or questions via email on moneyline@enca.com, or you can tweet us using the handle @ENCA News by hashtagging ENCA Moneyline. Until tomorrow night, goodbye.